How do you short a stock on Webull? If you're a beginner investor in markets, you'll undoubtedly come across the term short selling and you don't know exactly what it involves. This post may provide basic information on the short selling. Very simply, the short selling is where you sell stock you doesn't have. The very first query which comes to people's minds if they hear it is how you are going to sell something you don't have? Easy, you borrow the shares from the dealer who owns shares themselves or has an arrangement with the other institute to facilitate financing and borrowing of shares. Normally investors and also traders who sell stock short to do so for two factors. Either they consider the price of those shares will drop or else they trade under various hedging method. We are going to target on the initial of these two motives, namely the short selling to make on the expected declines in prices. Short selling is a bit more complex and perhaps more complicated to conceptualize to buy shares. Whenever you purchase stocks, it is a straightforward and easy to knowing. You pay the cost of shares in the firm and also you have these shares. When you sell short, it is not too easy. What you are doing is promising to bring shares the one that got these shares so that you should borrow shares as long as you have the short open position. In case if all goes as planned, the purchase price of these shares could go down, you will be able to repurchase them at a lower price, get back them to stockbroker from whom you borrowed, and you have made a good income on the deal. Not everybody have the brokerage account to facilitate short selling as well as borrowings. A typical share dealing account doesn't generally provide the facility you need to make a margin account and be permitted for borrowing. To establish such kind of an account, you need to place money on the deposit. The amount of the deposit would depend on stockbroker. The reason why you have to deposit funds is the short selling is inherently most risky than simply buy stocks, since the risk in theory is infinite. Think for a moment. If you purchase shares, the utmost amount you may lose is the price paid for shares, because the stock price may not at all drop below zero. If you sell short, on the other hand, there's no limit to what the price may go up, then you risk losing a lot more.